G'day everyone, back again with another episode on European hidden gem stocks. Today we're doing a deep dive into a well-known, not so hidden, European manufacturer, but I do think there are some elements of the company that is flying under the radar, and let's get into it. Today we're looking at Rolls-Royce Holdings PLC, ticker symbol RR, trades on the London Stock Exchange for around 130 billion US dollars, so it's a large cap company, not the usual small cap companies that I follow, but bear with me. Stick around, you'll find out why it's a good company. P of 17. That's interesting. Very, very interesting considering what this company does and what it's got going for it in the future. Founded originally, this is the car company I'm talking about, 1884, but the aerospace and defense sector, or the defense segment of the company, was formed in 2011. They had a new CEO from 2023. His name is Tufan. I can't even pronounce that, so I'm not even try. Sorry. A lot of employees, low insider ownership, high institutional ownership. Not something I usually look for, but it's popped up on my radar, and I'll explain why I think this is a good company. There's very high analyst coverage, so there's very good confidence in what the consensus estimates are going to be. And I don't own shares in the company just yet, but I am going to be starting a small position soon. And let me tell you why. So let me clarify what they do. They make aircraft engines. They do not make cars. That's a separate company. That part of the company was sold to BMW years and years ago, so it's definitely an airline engine manufacturer. So stick with me on that. But they also do defense and power systems. They have multiple different segments of the business that cover defense, industry, electrical power systems, naval power systems, nuclear reactors even, propulsion systems for all sorts of things that require energy. So I'll break down each of the segments of the business right now. So segment number one, civil aerospace. You might not know this, but a lot of their engines are on passenger planes that are flying around the globe right now. They have the engines on the A350 for the Airbus and also the A330 and also the Boeing 787 Dreamliner. That's the newer one that's come out. Their main product is the Trent 7000 series and also the XB series. They have over 1 million flying hours, so they're completely 100% reliable, well proven in the aviation industry, and they're very sought after. They also do a lot of small business jets flying around, so small short haul passenger aircraft. They make a lot of jets for those things as well. Segment number two, defense. They make the propulsion systems for naval warships. So the M30s, the gas turbines that their main product is for naval warships. For fighters, they make the propulsion systems for the F-35, the C-130Js, that's the Hercules one over here. There's a lot of them getting around, and they have 4 engines, so they're doing quite well in that sector. They also are the sole supplier under the AUKUS agreement for nuclear reactors for nuclear submarines. So the AUKUS agreement is a deal between Australia, the UK, and the US, hence the name AUKUS, and that's an agreement for Rolls-Royce to provide all of those nuclear reactors for all of those submarines Australia has ordered. Pretty good. Next segment. This is very interesting. Power systems. SMR means small modular reactors. They're designed to be container-sized nuclear reactors to provide bulk baseload power for energy grids and also other use cases like data centers. They also provide gas turbine power systems for data centers, and we'll get into that in a bit more detail in the next few slides. Another key question is how do they make money? Some of the money they make is in sales of new equipment, new engines, that sort of thing. But this is only about 20-30% of the cash they generate in their revenues. The biggest part of their revenue is in servicing. And see old mate here servicing the engine? That's how they make a lot of their money. From time to time, these passenger planes, they're going to need engine servicing, and that can only be done by Rolls-Royce. And guess what? Rolls-Royce also sells the replacement parts, the replacement components needed to make sure these engines are operating peak time on wing. That's the expression they use in the conference call, time on wing. That's one of their key performance indicators for making sure their engines are making money. What else do? They do overhauls. They do flights have been booming since COVID, so business in this area is very good. They also have licensing technology and government contracts for other stuff that they do um, concerning defence work and other propulsion systems that they provide to governments and defence contractors. Now, I really, really like this company, and let me tell you why. The CEO, I've just I put in an image of him draped in a crown, a glittered robe, and a crown, a lot of bling. This is an image I generated out of Grok just to express what I think of the man. He came in 2023. He made a fantastic speech telling it how it is, saying the company is a burning platform. It it was not growing rapidly, it was inefficient, and he made this famous speech where he instituted four pillars for future growth, steering the company towards more profitability, more sales, more growth. He had four pillars in this speech. One of them was called Confronting Reality. Two, Ruthless Efficiency, setting clear performance targets and pace with intensity. Now, this sort of mindset, this sort of cultural change in the organization is something that I really like to see. Next thing I like about the company is they got a massive tailwind from increased defence spend across the EU. Now, all NATO members, they're required to spend their 2% GDP, and some countries, won't name which, I'm living in one of them right now, has not been spending that 2% GDP. So a lot of these countries in the EU and NATO members, they're going to be increasing their defence spend over time. The next thing I want to talk about, why I love this company, is the profitability metrics are very, very good. This is a snip I've taken from Seeking Alpha. High returns on capital, not just now, but in the last 5 years since he's been at the helm. Return on capital, profitability metrics are much higher than what they used to be. And I think that's just going to continue. Another thing, even under mediocre management, they had a growing backlog. And in the last financial year, 2024, those backlogs have even grown a lot bigger, especially in defense. So these are great reasons why I like the company and why I think it's top tier as a European hidden gem stock that a lot of people haven't really looked for this information in the past and haven't thought about it. Now, I've had a brief look at the financials, and there's nothing that's really jumping out as a red flag here. Revenue's growing nicely, operating profit, cost of goods sold, free cash flow is going up, return on capital is going up, all of the key metric, net cash positions going up. These There's no major flaws, nothing that concerns me. The only thing that the only thing that it does concern me a little bit, they do still have a bit of long-term debt, but since the guy Turfin has come in as CEO, he's dramatically reduced that debt over the past 3 years, and you can see that in the financial statements. Now, let me cover some of the risks and dislike. It's not all sunshine and rainbows, is what I like to say. Um, it is in a sector where there is demand swings. Now, normally I avoid airlines and aviation like the plague because airlines are not a very profitable businesses. They don't grow very fast. They're not very uh, profitable. Airlines are just generally a bad industry to be in. You ask investors like Terry Smith, you ask investors like Warren Buffett, he said the same thing. They're low margin. People that own the airlines don't care about them. They're government backed. They're inefficient, whatever. So generally, aviation is a sector I try to stay away from. But because this has the attributes of the defense long-term play, increased NATO spend, we've got the energy transition play with SMRs and fueling data center growth. I'm willing to overlook those sorts of issues for now. Um, Number two, it's prone to supply chain issues. Like during COVID, there were a lot of issues getting parts in for components. Maintaining time on wing is important to airlines, and it's usually a deal breaker if an OEM like a engine manufacturer can't guarantee supply chains for components to keep their aircraft flying. So that's an issue that management need to be very concerned about. There is a bit of a debt hangover, but it is coming down, like I explained in the previous slide. Previous to the new CEO coming on board, long term debt was massive, and this guy has overseen a massive turnaround. And it's getting better, but it's something I will be keeping an eye on as I listen to the next few earnings calls. There is competition in this space. GE are by far the largest engine manufacturer for passenger aircraft. They do have the lion's share, but Rolls-Royce is an emerging competitor. BAE Systems is also a big player, and also Safran. Safran are a European company. I'm going to do a deep dive into them as well because I think when I was doing the research into Rolls-Royce, Safran did come up with good profitability metrics and good future prospect metrics in my ranking tool, which I'll explain on the last slide. There's also geopolitical and currency risk involved with this. It's traded on the London Stock Exchange in British pounds, and that's obviously prone to fluctuations, what's going on with the macro stuff. And there's also geopolitics too. So a lot of the stuff going on in Ukraine, a lot of stuff going on in Israel across the world, global conflicts, that can obviously impact the share price, which you have no control over. So what does the future growth story look like for the company? It's built on three areas or segments where I think they're going to expand into. The clear one is defense, where all NATO members are going to be increasing their defense spend, and more defense spend means more aircraft flying, making sure their airspace is secure, moving planes around with cargo and all that sort of stuff using the Hercules. They're very popular. The next one is data centers. Data centers across Europe and across even the United States, where Rolls-Royce already has a presence, they're going to ramp for the next 5 or 10 years, is my estimation based on some of the industry forecasts that I've seen. And I want a piece of that action. And I think Rolls-Royce is going to be a good industry player in the power supplies, not for just for data centers, but in the whole energy transition. They have pedigree in small modular reactors. They're not an Oklo or a NuScale Power that's trading in the United States with no profit, no revenue. They have proven ability to create nuclear reactors, small modular reactors, and they're not running on hopes and dreams. They have guaranteed nuclear fuel supplies. They have guaranteed um, knowledge and understanding and specialized a workforce to be able to build these things. They're not starting from scratch. So Rolls-Royce is one of the leaders right now in SMRs, and that was based on the most recent earnings call where they have the ability to create these SMRs right now, not in the future, not in 5 or 10 years. By 2030, uh, the CEO said this will be a profitable segment of the business, not just running on hopes and dreams. So what do I think? I think this is a fantastic company, and I am going to be starting a small research position into it soon. I rate the company 9 hidden gems out of 10. There's only a few companies that have rated 9 out of 10, and this is for good reason. I think the future growth pathways in the energy transition to do with SMRs, I think the future growth runway for defense and data centers is going to make the stock grind higher. I know it's already run up a lot, but it's still trading at a very low multiple of 17 and low price of sales. And have a look at the other nuclear names in the US. They're trading for ridiculous multiples and they haven't even generated any profits or revenue. This company is going to be SMR profitable by 2030. And I'd fully trust the CEO to deliver on that. Now for a bit of deja vu. This was not financial advice. The information in this presentation is only for education purposes only and not to be considered as personalized financial advice. I don't give buy or sell ratings. I just share what I think about companies. Always conduct your own research and consult a financial advisor before making investment decisions. If you'd like to read more about this company and other companies I cover, I do have a Substack and you can scan the QR code down here. And you can also sign up to my Patreon where I give members access to my stock ranking sheets and also buy and sell checklists. So thanks for your time and have a fantastic weekend. Sante.